Here's a question. Why would anyone pay more than what a company is worth? Let's look at an example. This lady on screen is Jane, who wishes to acquire a company. But what exactly is she paying for? Well, for my financial enthusiast, Jane is paying for the net assets of the company. Net assets is calculated as total assets minus total liabilities. Okay, let's dive deeper. If the net assets of the business is $30 million and Jane is paying $40 million, the difference of $10 million is known as goodwill. But what exactly is she paying for? Meaning the $10 million represents the company's reputation, the brand name, and the ability to earn future profits. Feel free to join my ACCA online course where I explain in detail what is goodwill and how to account for goodwill in the financial statements.